Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is a special edition where our focus is on the earnings season. And the company on our radar today is Asian Paints, India's largest paints maker, that has reported a mixed set of first quarter numbers and with profits definitely beating the estimates of the street, but revenue slightly coming under those estimates. In fact, the company has posted a 52.5% increase in the consolidated net profit for the first quarter at 1550 odd crore rupees. We've also seen a revenue increase of 6.7% on a year-on-year basis for the consolidated numbers, and that has come in at 9182 odd crore rupees. Now, to discuss more in details and more insights from these earnings and the company's vision going forward and what lies ahead, I'm now joined by the company's top management. Mr. Amit Syngle joins in. He's the MD and CEO at Asian Paints. Welcome, sir, and thank you so much for taking the time out for this discussion on Business Today TV. Always a pleasure having you with us. Well, first up, congratulations. A very strong numbers on the bottom line as well. Could you share with us the key drivers behind the strong bottom line growth and the outlook as well?
Okay, first of all, thank you for inviting me on the channel. I think it's been a good quarter as far as we are concerned, both from a bottom line perspective, and I think the volume growths have been in double digit to about 10% in terms of what we have recorded. And I think relatively a healthy value number of 6.7% in terms of what we have seen, given the fact that the last year, quarter one was a very, very strong base of a 38% volume growth and a 59% value growth to that extent. What we have definitely seen in the market today is that one clear factor which has come in is that the rural markets have definitely upticked from what we were seeing as a trend in quarter three and quarter four to that extent, which is a very, very positive sign. In fact, the T3, T4 tier cities have done fairly well, and now they are kind of matching the growths with respect to the urban centers of T1, T2 to that extent. Second, the whole area of the projects institutional market, the B2B business, has done quite well overall when we look at both from the point of view of the builder segment, which is upticked by the construction activity which is happening, or if you look at from the point of view of the government infrastructure or even the factory segment, I think we've seen a very, very strong demand coming in that front to that extent. The industrial business has been definitely on an uptick, both auto OE, refinishes business and the general industrial business has done fabulously well with respect to double-digit growths in terms of both revenue as well as from a point of view of profitability. The home decor business in some of the categories has done well overall from the point of view of invigorating retail, where we are putting a lot of spends with respect to putting our stores to that extent. I think all these have been really instrumental in terms of really guiding this kind of a quarter in terms of what we have seen with respect to relatively healthy top line and very good margins in terms of what we have seen.
Absolutely. Gross margins expanding whopping 530 odd basis points to 23.2% in Q1. Would you be able to sustain these margins at these levels, and what would your overall outlook be for FY24 on margins?
So we've seen softening of raw material prices both in quarter four and quarter one to that extent. In fact, quarter one saw about a 2% kind of a deflation with respect to raw material prices. So I think the issue of margins is directly correlated in terms of how obviously the raw material prices behave as we kind of go ahead. We are seeing a certain uptick with respect to the crude prices in the recent number of days and weeks to that extent, and also a little bit of a volatility with respect to the rupee dollar kind of positioning. So I think it will all depend in terms of how these things stabilize and what is the definitive trend we see in the next about 4 to 6 weeks in terms of going forward. As of now, we are maintaining our guidance with respect to the PBDIT band of 18 to 20% in terms of what is there. That is definitive for the year in terms of going forward. We are also looking at higher advertising spends and below the line spends to really invigorate the market in quarter two and quarter three going forward. Therefore, at present, I think we are maintaining the band in terms of guidance which we have given earlier with respect to our margins.
Okay. What's the demand trend across, the various industries that you cater to, and the outlook on demand from the festive season going forward from here?
As I said, overall, from the point of view of demand, the project sales institutional business appears to be strong. I think the whole real estate sector and the construction activity, which will continue to that extent. Therefore, the whole builder business which comes in, or even from the point of view of government spending, given the oncoming general elections next year, I think some of those trends should continue, which would kind of really, continue to kind of rekindle the overall projects demand to that extent. Even as from the point of view of retail, what we see very clearly that the rural sector has picked up, and we hope with the onset of good monsoons and a pretty long festive season, I think it should kind of really augur well in terms of the overall demand to that extent. Industrial sector, as I said, today we are seeing a lot of action with respect to the auto segment to that extent, and definitely both the four-wheelers and the two-wheeler industry is kind of looking good in terms of going forward. And the expansions in the entry of the newer businesses in India is giving an uptick to the factory segment. So I think all in all these kind of segments kind of augur quite well in terms of looking at what the festive season looks like going ahead.
Okay, you did talk about how the domestic decorative business has shown, strong volume growth as well. So, could you share with us on this segment, particularly outlook on both value and volume going forward?
So when we look at even the last almost 10 to 12 quarter trends, or even the CAGR trends, you are seeing that we have been maintaining our entire double-digit volume growths overall. In fact, the CAGR currently is at about almost 17% on a 4-year kind of base to that extent in terms of what we see. We are pretty positive in terms of saying that for the full year, the double-digit growth rate guidance should be there definitely in terms of going forward. And this is obviously at the back of, as I said, a longer festive season to that extent. Good monsoons, which are kind of coming, which is kind of breaking up the positive segment with respect to the rural growth to that extent, and the uptick with respect to the projects business in terms of spending happening in the market. So I think basis all that, we should say that the double-digit volume growth guidance for the year is definitely on.
Okay. We've particularly seen your international business sales, your bath and kitchen fitting business also seeing a drop. And this has been being witnessed over several quarters now. Why is that, and what is the outlook here?
So overall, what we have seen is that from a point of view of the international business, it's been a little bit of a mixed market. We have seen good growths coming in the Middle East and some part of the Africa to that extent in terms of what is there. But as far as I think the Asian markets are concerned, there is a bit of a turmoil happening there. Nepal definitely has got into a very sluggish economic activity. Liquidity crunch is there, and we are seeing a lot of business challenges in the last about 2 to 3 quarters to that extent. Similarly, in Bangladesh and Egypt, we are seeing some of the devaluation challenges and the forex challenges which are coming into that extent. Demand has been a little bit slow. Given that, therefore, we see that it will take some time to recover as far as some of these markets are concerned. But having said that, the Middle East markets, the South Pacific markets are definitely, I think, buoyant and look good to that extent. And therefore, we want to make up for the Asian markets non-performance somewhat in the Middle East markets as we kind of go ahead to that extent. Overall, from a home decor point of view, the bath and the kitchen business has been definitely slow. This quarter, perceptibly, because of very high bases, which were the price increase bases of last year, we have seen a larger kind of a difference to that extent. But today, other categories which are there, which is the category, the doors and windows category, the fabrics category, or even the furniture category, I think is definitely seeing an uptick. Last year, we have doubled the numbers in terms of all these categories. This year, we are looking at in the quarter 1 almost like a 20 to 30% growth coming in. We have put about almost 44 large format stores called the Beautiful Home stores, and we are looking to add another 10 stores in quarter 2 and quarter 3. Given all these imperatives and the fact that we are talking of newer launches here to that extent, we want to kind of invigorate the home decor market, which I think will also get fueled by, I think, the increasing new housing demand, which is kind of coming to that extent. And we think it should kind of really go definitely much better as we kind of go ahead.
Right. So, what could be, the estimated ballpark capex that you're looking at for this expansion, and what kind of revenue visibility do you have from these segments?
So overall, we have announced almost a 8,750 crores capex in the last 2 quarters for the next 2 to 3 years. This includes basically a greenfield venture of a new plant coming in central India to that extent, and a lot of brownfield ventures in terms of expansion, in terms of our existing plants in north, in Maharashtra, and in Gujarat to that extent. We are talking of backward integration, newer ventures coming up in terms of our VAM VAE emulsions, which has been announced, and second, in terms of even with respect to white cement, in terms of what is there. We are also having now a new factory, which is increased capacity coming for both kitchen and bath in Maharashtra to that extent, which will kind of come up in quarter 2 to that extent. Given the fact all these investments are there, this is a pretty heavy investment we are talking of the next 2 3 years, and therefore we see an invigoration going forward in terms of all these segments, in terms of what we see in terms of the market going to that extent, and we are pretty positive about it.
Okay, just one last question, sir, and that's on the competition. We've seen Grasim and JSW Paints also new entrants in the industry. How is competition likely to change your outlook for the business?
I don't think so. It is going to change anything in terms of going ahead to that extent. And I've been maintaining this for a while to that extent, because some of the players you mentioned have been in the market for the last 3 4 years. We have also newer entrants which have come in the last 6 months. I think competition always has been part of this industry, whether it is multinationals coming, whether it is Indian players coming to that extent. We think as a brand, we are very, very strong with respect to our brand equity and our strengths with respect to supply chain and the innovation we bring to that extent. So we are very clear that we are clearly differentiated from the market. Our retail footprint is very, very strong, and we would kind of really charter our own strategy in terms of going ahead, which will definitely possibly give us what we want to kind of achieve with respect to our overall business going forward to that extent. And that is the indication when we have put so much of capex in the market going upfront for the next 2 3 years.
All right. Well, on that note, many thanks, sir, for taking the time out and discussing and detailing your earnings fine print for all our viewers. And here's hoping for many more interactions going forward as well. All the very best to you for the future quarterly earnings too. Many thanks for being with us, sir.
Thank you so much.
If you like the video, do like, comment, share and subscribe.